up, everybody? It's Omar from the Bullish Bears team. It's July 4th, 7:32 p.m. I've been running around all day. Wanted to make this last video because I'm going to be off the grid. I actually leave on vacation Thursday, so be off the grid. Wanted to make a watch list for tomorrow. And you know, just leave you with this for at least for the next week or so. You know, yesterday was a short trading day. Tomorrow we're back to normal. You know, let me just pull up my scan just to make sure everybody's aware that nicely scan big moves. All right, here we go. So, you know, my criteria again, I look for now 20 cents and $50. I actually raised the range, and soon I'm gonna start looking for stocks upwards of up to $100. What I'm noticing, guys, and this is something for you all to think about, especially for you guys who have accounts with like $5,000, $10,000. You know, stocks with higher price stocks have a lot of range. So, you know, they usually move in increments of $2, $3, $4 at a time, up or down, and which is great because, you know, you can buy 100 shares of a stock and triple that in one trade. You know, with very little risk. Sometimes, you know, if you're buying a penny stock, you know, a stock that's $5 or under, you know, for example, you buy a stock that's you know, like $1, you know, you got to risk like 1,000. You got to buy 1,000 shares to make a 10 cent move will make you $100. But if it goes the other way, you know, you lose quickly. Now, if you buy 100 shares of a stock, you know, for every 10 cents you move, you only make $10. But when you look at the larger price stocks, like, you know, stocks that are 40, 50, 60 bucks, they move so much more. They go like a stock opens at 50 and it moves up to $56 and back down. So, you know, your risk is small. If it goes against you, you can stop out at 40, 50 cents loss and you only lose $50, you know? You know, so it's just something to think about. So I'm gonna start, you know, looking at some of the higher price stocks. You know, I don't wanna miss out on opportunities. You know what I mean? I just want to capture them wherever they can. So we got 38 stocks that fit my criteria. I looked at between 20 cents and 50 bucks. Normally it's 30, but you can make it whatever you want. You know, and that criteria is here. So I'm gonna go to charts. Another thing that I'm starting to adopt more is I'm removing all the indicators on the 1 minute chart. I'll probably leave them on the 5 minute, but I may even move them from there at some point, and really just focusing on support and resistance. You know, theoretically, you don't really need to. You know, I only leave. This is VWAP. It's probably the only thing I may leave. Outside of that, I'm probably not going to use indicators anymore. And with that said, let's look through our watch list. So TRTC, you know, opened at 21 cents, hit a high of 25. It closed at 23.9. This was 16 cents 5 days ago. Now, do I know if it's going to continue to move? I have no clue. You know, but we got a pop. We may get another pop. So, you know, I'll put it on the watch list here. Let me, let's go here. Let's go create a watch list. Let's put 7/5/17. Hit save. And here we go. All right. So TRTC, we'll put it on there because maybe you get a pop at the open tomorrow. Who knows? All right. Next up, TK. TK, look at this, had a nice move, mega move here, all the way up. Now, if I'm watching this, right, you know, this is VWAP, you know, if I'm going to make an entry, you know, let me get rid of this for a second, remove. Draw set, let's go here, how to draw, here we go. So, you know, if I'm looking at this, you know, I'm looking at my entries. Why does it keep doing this? It's not what I wanted to do. So remove. Sorry about this, guys. Let's go to drawing. Here we go. All right, so let's do that. And man, I think I got it defaulted to this. Let me just go back, drawing tools. Here we go. Now it should work. Now let's remove this. So you see this pullback? These bull flag pullbacks are where I would enter. So if I was watching this right here, if I see a volume push after that pullback, I'm in. Same thing here. If you see that pullback here, right here, you see the volume push, you get in. Look at the sideways consolidation flag movement. You see that right there? You know, you may get a push, but remember, you usually get two and then a pullback. But here you got 1, 2, 3 consolidations, then these little mini pullbacks until it found its higher day. What I like to do is wait for that higher day to form like this, where you get that higher day candle, the little pullback in the lower high form, and then I like to wash. So this is where I'm gonna enter. But if I was watching this, you know, at some point you gotta expect it to wash. So here, right in here, and you know, it's forming this head and shoulders pattern. You see, shoulder, head, shoulder, collapse. You know, it found its support here and it continued on up. But you know, you could have took this short here, right here. 786 would have been a good entry down to that 762. Remember, guys, take profit. Don't be greedy. All right. Next up, TGP. Look at this. It went from $15 to $18.40. You know, nice ripper. So we're gonna put that on the watch list, TGP. And it was $14 5 days ago. It's at $18 now. So you know, this thing keeps moving. You know, and you can look at the yearly. Oops, let's go there. Sorry about that. Let's go to 1 year to kind of get a sense of where it is. You know, and on the yearly, you can see, man, it had this super overextend. I mean, it's really overextended right here. So you know, on the yearly, I like to look at the let me put the yearly here, because here on the yearly, I like to get a sense of the range of where it's in. It's almost the RSI is almost hot at 70, but the MACD's curling, and you got that squeeze. But you got to expect it to have a nice pullback. So I would be looking for some sort of short entry on TGP. Doesn't mean it's gonna keep going up, but you know, you may get a wash come tomorrow. PIXY, another stock that opened at 819, hit a high of 970. So you see, look, it gaps up. So you got this is the little consolidation pattern, breaks high of day. Now, according to the gap and go strategy, right here is high of day pre-market. So you're you know, a lot of people will look to see it break the pre-market high to get in. But when you get this consolidation and a push, look, you get that push up, you get that pullback right here. So there's the flag, right? And that's why I like taking off the indicators, because you could see it nice and clearly. People, you know, when I teach this, people get so caught up with the indicators and they're not focusing on the pattern. And then, you know, you get that next push up. So you got that little consolidation here. And if you notice here, it's forming these higher lows, right? Like this nice little flag pattern. And then you get that last push, and then you get the reversal. So right here, look, it starts gapping down, you know, and then it goes up all the way back up to 970. Now, at this point, this is high day, right? So if I'm watching, this is what I like to do. I like to let it, you know, see where it's gonna bounce. Now here, I'll be honest with you, I might have taken a short right here, and I would have got clobbered, because you know it went up. Now this is what separates the men from the boys. Now you can say, okay, I'm gonna risk 970. Now let's say I got executed my short, let's say 935. You know, it's going against you, so you're down. Now let's say if you have 1,000 shares, you know, you're losing for every 10 cents it goes up, you know, you're losing $100. So you know, you can hold through this and say, all right, I'm gonna hold till if it breaks higher day, I'm out. But if you would have held tough, and you see the higher day form at that 966, you know, you could have held through this, and you know, it collapses. You see it goes back down, forms a lower high here. That's the confirmation that it's getting weak, and it comes all the way down to 878. So you know, you gotta be careful. There's sometimes where I do the lower high here, and you know, you get that wash, and you know, and you know, you just don't know. So that's why you need to know what your tolerance is. And a lot of you guys who follow me thinks this is so easy, and you're not trading with real money, and you don't understand the emotions that go into this, especially when you see that P&L is red and you're losing hundreds of dollars. You know, you gotta understand risk management, man. Or if not, you're gonna lose all your money really quickly. All right, so is that gonna be on watch list? Yeah, because it's holding its highs. It was $6.35 days ago. It's at $9 now. You know, so let's keep moving. TEO. Look at this. This thing went from $25 to $29. It had how much volume? 1.3 million shares traded. So it's not super liquid in terms of volume, but enough to, you know, take a look at. It was at $23. Now it's at $29, which is crazy. And you know, you should look at these stocks, guys, too. Like for swing trades, you should say, okay, man, $23. Let me look at the yearly. What made the catalyst? Where's the support? Oh, it found its support somewhere here at 23. You know, it seemed at 23.66, and now it's running. And look, it's hot. So you know, you probably, there might be a shorting opportunity come tomorrow. You know, and this is where you get that range where it probably pulls back, you know, 2 points. And even if you short 100 shares, you know, you can make, you know, a couple $100. You know, if you catch the right time. So it's just stuff to think about. All right, next up, OZM. Let me pull up 5 day 5 minute. OZM, you know, 1.39 million shares traded. This thing popped all the way up to 310. You know, came back down, and it saw these crazy wicks. It was at 242. I don't like it, but you can put it on your watch list if you want. DNR, nah. XPER, look at this. This thing went from, and this is what I was talking about when those $30 stocks. Look at the range. This thing started at $30 pre-market, went all the way up to $35. So let's say you invested 100 shares using the low as a stop, and just rode it all the way up. You would have made $500. Now that, that's simple. That's 20/20 hindsight, but I'm just trying to make a point that the range is there. Now look at this. This would have been an easy short. You see how it starts coming down, forms the lower high. So this is the high of day, right? Right here. It comes down, forms a lower high right here, and right here you could have took this short. Let's say you invested 100 shares and you got executed. Let's say somewhere like 34.75. Look at this, 33, 32, a couple of $100, just like that, And if you have a sizable account, this thing went all the way down to 32.50. This stock was at $29 at 34, so it's got this gap to fill. It may come back down some more. So keep an eye out on it. But that's what I'm talking about. Where these higher price stocks, don't let Tim Sykes and all these guys bullshit you. They always tell you, oh, you need low float catalysts to have moves. That's bullshit, man. This is proof. It's a $30 stock and move 5 points up and then 3 points down. So it has range. These stocks have a lot of range, and yeah, they're more expensive to purchase, but you don't need as many shares to get a significant move, and your risk tolerance is less. So don't exclude $30, $40, $50, $60 stocks, even $80, $90, $100. If you can afford 100 shares, go for it. RATE, nope. CEI, nope. IRAT. Look at this. This thing went from 627 to 675, just in this nice angle. And this is what I like about the 5-minute chart. I use the 13 EMA, and if you take a trade, as long as it rides the 13 EMA, you stay in. Look at that 13 EMA crossover VWAP, that one that's indicators that I put in my previous video. It doesn't always work, but it's pretty good. Look at this. The RSI was hot all day and it never pulled back, which is pretty crazy. It's probably a pump. Who knows? Let's see where it was 5 days ago. It doesn't have a lot of volume. 607. I'll put it on the watch list just because it held its highs. Take a look at the stock, see what the company history is. CVM, nope. ECR, nope. RNE, NE, look at that, had a nice move. And this stock trades with range. It's at 405. It had this nice move up. If you look at it, it's nice range here, and you see it's forming this head and shoulders pattern here. Shoulder, neck, head, shoulder, and then it drops down all the way down to like 387 before it found its range again. And look, it's so easy to see the pattern sometimes when you don't have the indicators. Now here, where do you know where to get in? On these pullbacks, but you gotta be careful, man. If you don't chase, and if you decide to take a crack at it, remember, use that trend line. So if you're gonna get in and say, okay, as long as it doesn't break the trend, like right when it broke here, it found its support here, but I don't care. Once it breaks the trend, if I'm chasing, I'm selling, because I don't know where it's gonna go. Now you could use VWAP as your stop. You could say, okay, well, I'm gonna see what it does, and depending on where you get in, you could use VWAP as your stop. So there's a lot of ways to play it, but if you're looking at this on a long entry, you're gonna look at the 5, 1 and the 5, like right here, clear on the 5-minute. This is a clear entry right here, and I use the 5, but you can also use the 3. So let me go here. A lot of people, 5-day, 3-minute chart. A lot of people, they don't even use the 5-minute. They want to manage their risk a little easier, so they use the 3-minute chart. Let's see what it looked like on a 3-minute chart. Here it is. That's the first pullback. That's another pullback. It's another pullback. So all these are entries, and some people use the 3 and they don't use the 5, So it's really a matter of preference. And on the 3-minute, you get a nice, cleaner, entry, so it depends. I mean, if there's less volume, you want to use longer time frames. If there's more volume, you can use less time frames. All right, so you can get a clear indication of what the stock is going to do. Now, am I putting this on the watch list? Yes, NE. I'm just doing this to give you an idea of where your entries would be, on this NE. Let me pull up NE again, just so you know, if I'm watching this, look at the head and shoulders patterns. See how easy it is to see when you're not, when you don't have the indicators. It's nice, easy. Look at that. Look at that head and shoulders pattern forming. And right here, I mean, you could go in this 4-5 right here, that 4-4. Theoretically, you could see it said, oh wait a minute, it formed this lower high here and it's losing strength. All right, I'm gonna risk. I'm shorting right here 4.3. I'm risking 4.5, and you could have rolled this down. Once you saw that, so and your risk is so minimal. You just gotta have the discipline to stop yourself out if it goes against you. All right, RDC had this really nice move from 10 to 11. And again, this is a 3-minute time frame. And if you see, look, it rides the 13 EMA, never breaks below it. Right here for a second it does. You can say VWAP is your final out, but it's hard to get a sense of where your entries are. If I was looking at this right here on this push, like on this pullback, and if I see another push, that would have been my first entry. Right here, you see this little flag pullback? Right here would have been my second entry. And then, you get these pullbacks here, but at this point, these are all little pullbacks, but on the third, fourth, I don't know if I'm chasing this after the second one. It's hard to get a sense, and there's not a lot of volume. There's some volume, but not a ton of volume. So you gotta be careful, man, if you're gonna chase these stocks. But you get these pullbacks and you keep getting these pushes up. On the 3-minute, I feel a little more comfortable looking at a longer time frame to get in. Like, this is a clear indicator, this is a clear indicator, right here is a clear indicator, and it bounces right off the 13 EMA. So if you want, if you want to use the 13 EMA on the 1 minute, or you can use exactly everything that I've been showing you. It's fine. It's not that it's wrong. It's just that I had some issues with my day trading, and I was like, you know what? Let me just take off all these fucking indicators, focus on the patterns, because that's really what matters most: patterns and volume. All right. So next up, SBC. Oh, is that gonna be on my watch list? RDC. Yeah, let's put it on the watch list because it held the ties. And you can see, 607. Oops, sorry. It was 1009. Now it's 1132. So you can see, SB. Nope. Nope. I'm not even pronounce it. FMSA. It was at 358 5 days ago. It's up, trending, but it's too choppy. HK. Nope. I mean, it was 382. Now it's at 493. And if you're thinking about swing trading, this is what you want to look at. You want to say, okay, what was the cat? Look, it found its low 50, and it looked like this was its 52-week low. All right, this is a yearly chart, and found some resistance, and you see the RSI. This is where on the yearly, yeah, I like to look. I definitely like to use indicators. Right here is the low. It found the support, and it started gapping back up. And you see the MACD starting to curl. People love a discount. People just sometimes trade these stocks based on the technicals. They don't even look at the fundamentals. GST, I'm in a swing right now currently, and I didn't give a shit about the technicals. I was just looking at the fundamentals. I'm sorry, I didn't give a shit about the fundamentals. I was looking at the technicals, noticing that this stock, if I look at the yearly, its support was at 80 cents previously, and it bounced off that 80 cent support level. So it originally hit that low back in where was it? September 27th on 2016, and it kind of reached that close to it actually on June 22nd. So when I noticed that, I just took a swing. So now I'm in it. I think this thing is going to continue to gap up, especially because it's one of these gas stocks, and oil and gas is going to expect it to go back up. So I'm in for a swing. I don't know how much I'm going to swing it for, but I'm going to take profit along the way. All right, and I'm risking that 80 cent. So MACD looks good. The RSI is still relatively low. It seems to be, it didn't have a ton of volume yesterday, but it was only trading half day. So we'll see, and that's kind of how I figure out what I want, like, how to find some of these swings. All right, with that said, let's keep moving. I want to keep this longer than what I expected. Next up is let's look, GNC. Yeah, GNC had this nice move up. Let me just remove this clear draw set. So it had this crazy rip, and no pullback, just ripped, and you don't know where your entry is when you see something like this. It's kind of hard to get a sense. Even on the 5-minute, it just gapped up. If I was gonna get in, the only play that would have made sense to me, and that's why VWAP kind of still matters, is this VWAP bounce. So once you see it bounce off VWAP, you can use VWAP literally as your stop and just ride that little pop. That's what a lot of other traders probably. And look what it did. It popped up to like that 909, came back down, look, bounced right off VWAP again, 9 to 913, bounced off VWAP again. So scalpers were killing it doing that. There's just scalpers that go in, they take like 5,000 share positions, because there's enough volume here where they can do it. And you know, they making, you know, quick, you know, $500 on each scalp. You'd be surprised. So yeah, we'll put GNC on the watch list. GNC's crap though. It's gonna come back down. So you can find shares to short. Look for shares to short. Next up, WLL. You know, this thing was at 551 and it's up at 590. I'm not gonna put on my watch list, even though it's kind of holding its highs. It's too choppy. SM. You know, this thing ripped. This was 1528. Now it's at 1766. Again, you know, always look at the 1 year, get a sense. Look, this is found its. Let's look at the 1 year chart. Look what it is. It was at $43. When a stock finds its support, you know, and you don't know when, but you know, it's gonna find its support somewhere. You know, it's gonna start bouncing the other way, you know. And look at this thing just been ripping. That's why I tell people, look up for stocks that are like the 52-year low and see where it finds clear support when the market opens. Kind of see if it dips below the low of the year, and if it doesn't dip below that, the day the day of that market, find where its support is at that point, and then you can take a swing trade on it, risking that. You know, that's what I did on RAD. You know, and now it's, you know, Rite Aid, and now it dipped below it. So let me pull that up. Let me pull the 1 year over here. So you know, RAD was right here. This was at its this was its low. All right, on the 29th, and on the 30th, you know, it opened right. It opened at 277, hit a high 295, hit a low of 261. Well, when it hit a low of 261 on that day, it gapped up and it pulled down and formed a higher low of 264. And that is when I knew. Let me see if I could pull up the 5-minute chart so I can show you what I'm talking about. So here, this is where I took the trade, because right. So you know, this is the low. We already had touched the low at this point, right? But the stock, you see how the market opens and it sells off and it finds this 264, gaps up to 273, comes back down to 261, gaps up to 266, forms that higher low of 262, and it starts gapping up. Well, once I started seeing that it started getting this buying pressure, I just took a swing trade on it. I just bought like 10,000 shares because I didn't think it was gonna crack. Now, that was a risk. It could have kept going down, but I figured, all right, it's at a yearly low. What are other traders thinking? They're thinking, hey, this is a discount. So, you know, you just take a trade on it. And I took a trade on it, and I held it the whole day. And I held it because, you know, it closed holding its highs, and then pre-market it was in this range, and I just started selling my shares pre-market, and I pretty much got out pre-market, and I made like $2,800, something like that. And you know, and then it kind of, you know, collapsed, and now, you know, it hit that 268. But if you saw what it did the rest of the day, look, it's at that low now, 269. So, you know, see what it does tomorrow. Maybe it bounces back. If it doesn't break below 261, you know, maybe worth a swing trade, you know. So take a look, you know, and that's how you take these swings, you know. You know, you take profit, you know. All right, so let me finish this off. MDR is another stock that moved. We'll put that on the watch list for tomorrow. You know, it had this nice gap, and look at this. Look how easy to show. Look at the head and shoulders pattern forming right here. And you see clearly the lower high. This is high a day, lower high. You risk the 3 cents, and you just take a short on it, you know. And this thing came all the way down to 754. All right, and it was, and it's been up in this upward trend ever since. It's riding the 13 EMA now. So that's to me, that's bullish. When I see that, that's a bullish sign that the stock is primed for a run. It was at 676 5 days ago. It's at 767. You know, take a look at it. Might be worth a swing trade. Where's your entry, you say, Omar? Well, what I like to do is, me personally, I like to see it get as close to the 13 EMA as possible. So if I have the 1 year up, the 13 EMA is at 691. So I want to see how much it would pull back, get to as close as that 691 as possible. Or really the right answer, even the better answer, is the low of the previous day, which is 699. All right, that seems to be support right now. You see these two days, it hit 699. So if it pulls back tomorrow, if it gets close to that 699 level, that's where I would be looking to take a swing on it. And, you know, and you're gonna see what it's done over the last year. So let me zoom out. You know, there's a stock that, you know, at its height at 833. So you know, you want to, you know, if you're looking to get in, you say, hey, I'm gonna ride this to see if it hits close to $8 and take my profit. You know, so that's sort of what I kind of do. But I need to make a video just exclusively on swing trading, and you know there's no golden ticket for swing trading, guys. I'm sorry, you know, it's just calculated risks. OAS, you know, gapped up and it found its support here at like 832. You know, am I gonna put in my watch list? Nah. I mean, but if it breaks that 830, you know, you got this range all the way back down to short it. RIG, yeah, this thing, you know, had a nice move up. You know, look at this, all these pullbacks, and it just keeps pushing. These are all, you know what this is, guys? Short sellers getting squeezed. Shorters coming in trying to drive the price down, trying to drive the price of the stock down. And what's happening is that more volume comes in, and then they cover because they panic. That's all these. That's why these things keep going up. You know, that's all that is. And you know, and it's so choppy. It's hard to take a you know, a chance on it. But you know, at some point though, it, you know, the shortest did win. You know, 883 here, it comes down, falls this low high 81, and just keeps going down and up, and then it kind of closed. You know, I don't, you know, rig. I think I traded this before. I think it's one of these oil companies. Yeah, you know, and this is a stock I'll put on the watch list, but I've seen this stock trade with a lot of range before. If you look at the yearly, you know, stock has been as high as 1666. You know, it found its low at 767. It's been on this range up. So, you know, look for oil. Look at oil and gas stocks. You know, and then look at all the tech stocks that are selling off. You know, when they find their CO is up, not a lot of volume, but look at this. This thing's been running. Look at this, how it just rides the 13 EMA for the most part. You know, dips below it, but it kind of stays above it, and it's just been riding it the whole time. It's pretty wild. TOO was apt up, down. Look at this, it was 165, and it's just been riding. And look, now it's riding that 13 EMA. When you see it above the 13 EMA, that's a good sign. That's a bullish sign. You know, the stock may have some momentum. You know, it doesn't last because look, you know, you had this nice little run here and then it came down, but look, and then it cracked. So, you know, it doesn't guarantee anything, but you know, I just like to use it as an indicator. BBG, nah. BRAS, nah. KS, you know, had this nice range, but not a lot of volume, but it has a lot of range. And look, it found its support here, so you know, it may continue to go up. We'll see. KIM, look at this, 3 million shares. It's very choppy. You know, for momentum, it's very difficult to get a sense of this. You know, and usually the spreads on these stocks are crazy, so I stay away from them. But look how it just kind of rides at 13 EMA the whole time on the 5-minute. That's why if I take, you know, a lot of times I'll look to see on the 5-minute chart. And a lot of these stocks that are choppy like this, I only take 100, 200 share positions. I don't take big size in them, you know, because they're so volatile and the swings are so crazy that, you know, I don't want to get caught out there. So if I lose $200, I'm okay with that, you know. But, you know, say I take a 200 share position somewhere in here and I ride it all the way up, you know, I make close to $200. That's good for me. All right, so these are the stocks on my watch list for tomorrow. I mean, there are some others here. You know, I didn't really look at. But you know, I'm gonna keep it short. Hope this makes sense. Enjoy the rest of your 4th of July, and I'll see you when I get back from Europe. All right, bye.